Fort Knox, Fort Knox, Fort Knox. Everybody's saying we've got to audit Fort Knox. This is Trump saying we're going to go into Fort Knox and make sure the gold is there. If it isn't there, we're going to be very upset. Well, guess what? If we're going to audit the gold, we need to audit all the gold. There needs to be bar numbers, weights, purity, the hallmark on the bar, and the title. Who owns it? That's the most important thing. Has the gold been rehypothecated? Now, I do think going into Fort Knox is great. Now, Fort Knox, if the gold is there, it's more than likely there, actually. It's at the Fed that it would be missing.
Treasury officials are excited to confirm that Fort Knox's gold reserves are secure. In a recent interview, Treasury Secretary Scott Bessent shared that annual audits consistently verify that every ounce of gold is present and accounted for. Former Treasury Secretary Steven Mnuchin added his support, reminiscing about his visit and expressing unwavering confidence in the gold's safety. While many voices advocate for a thorough audit, the assurance in our reserves is truly encouraging. The debate over the transparency of U.S. gold reserves intensified after former President Donald Trump suggested a personal visit to verify the holdings. His remarks have fueled speculation and reignited demands for a formal inspection, with some arguing that any audit should extend beyond Fort Knox to include other storage locations. Investor speculation has also been driven by Bessent's earlier comments about monetizing the asset side of the U.S. balance sheet for the American people. Some analysts believe this statement hints at a potential revaluation of U.S. gold reserves, which are currently priced at $42 per ounce, a legally set valuation that has remained unchanged since 1973. Financial experts, including MikeMaloney from goldsilver.com, argue that doubts about the integrity of the nation's gold holdings will persist without a full audit. Maloney suggests that military oversight may be necessary to secure and verify the reserves if any discrepancies or unauthorized movements are uncovered. As calls for transparency grow louder, the debate over whether the U.S. should reassess its gold reserves in terms of location and valuation remains a critical issue in financial and political circles. Adding to these concerns, Senator Rand Paul, chairman of the U.S. Senate Committee on Homeland Security and Governmental Affairs, recently sent a letter to Treasury Secretary Bessent urging a full audit. He highlighted that Fort Knox has not undergone a comprehensive inspection since 1974 and called for a review that includes gold purity testing to ensure greater oversight. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
They've absolutely stonewalled us for decades and decades and decades. When we ask for an audit, we don't get any results when it comes to the Federal Reserve or America's gold. And thanks to Egan von Greyer's America, Show Us Your Gold Hand. A potential U.S. gold revaluation will have zero meaning if they don't prove to the world that they have the 8,100 tons that we say we've got. A proper audit must, of course, include all gold leasing, and we know that central banks lease gold, futures contracts, etc. I doubt we'll ever see the true position. If you don't understand what I mean, all the paper gold will be worthless, and physical gold will really be worth its weight in gold. So the Secretary of the Treasury, Bessent, says revaluing gold reserves is not what I had in mind when he was talking about monetizing the asset side of the balance sheet. And Otto von Bismarck said, never believe anything in politics until it's been officially denied. You can never be certain what a government is going to do until they deny it first. Once they've denied it, you can be certain. So, moving on. StoneX CEO says 2,000 tons of gold have entered the U.S. over the last 2 months, and to which James Anderson replied, that's more than 3 times the record-sized numbers already inflowed into the COMEX of late. Where's the rest going? So, I want to make a speculation here, and that speculation is that the Federal Reserve, we know that central banks lease gold, and there are certain bullion banks that help with the malarkey that goes on fiddling with the gold price. And so I want to point people to Ronan Manley. Ronan is an excellent analyst and investigative reporter, and his 3-part series here, The Gold Vaults at the New York Fed. Now, the New York Fed has quite a bit of America's gold. And the part number 2 is the Fed's rarely discussed auxiliary vault, and suggests that the auxiliary vault of the Fed is probably located in the neighboring Chase Manhattan Plaza facility, now run by J.P. Morgan. And so here are the places that America's gold is being held. So you have Denver, Fort Knox, and West Point is the majority of the gold. And so they need to be audited simultaneously. And then all of the Federal Reserve vaults. This has to be audited as well. And if there is, as has been suggested, we know that the J.P. Morgan vaults are 5 floors below ground, right across the street from the Federal Reserve vaults, which are 5 floors below ground. Now, there is a reason for that coincidence. That's where the bedrock starts. And so you go all the way down until you hit bedrock, and both of these vaults are going to be roughly at the same level. But since there's an auxiliary vault that's not part of the main vaults underneath the Fed, could there be that tunnel? If there is, that has to be, the military needs to take charge of that tunnel and make sure nothing comes through, because it's really important that all the gold, everything is basically frozen, audited, and we get those bar numbers, weights, purities, and title.
Gold prices continuously set new records, driven by strong physical demand as investors and institutions seek safe haven assets amid economic uncertainty. This surge in demand is creating stress signals across the market, with delivery times extending, inventories tightening, and bullion premiums rising sharply. The growing preference for physical gold over paper claims reflects a deepening crisis of confidence in official reserves and gold-backed financial instruments. Deliveries on the COMEX have reached record levels, signaling an unprecedented shift toward physical gold ownership. This trend could trigger a snowball effect, prompting other major institutions and central banks to accelerate their delivery demands, further straining the system. The London Bullion Market Association is also experiencing a rush to secure physical gold, underscoring the risks associated with banks' management of short positions. If these institutions struggle to meet physical delivery obligations, they may be forced to tap into the reserves of gold-backed ETFs, potentially exacerbating market volatility. This growing imbalance between paper contracts and actual metal supplies is becoming increasingly evident. According to MikeMaloney, as investment demand rises, the pressure on gold and silver markets intensifies, revealing the scarcity of physical metals. If these trends persist, prices may soon be dictated by real-world availability rather than the manipulated valuations of the paper market, potentially leading to a fundamental shift in the global financial system. Let's get back to the interview.
Normally, this is the exports from the USA, the Swiss exports from Switzerland to the USA. However, this isn't a net number. The US is almost always exporting gold to Switzerland, and it's a much greater quantity than we receive back from Switzerland, and the balance ends up going to China. If you take the net, you would see that these numbers here are negative, then it turns positive during COVID, then it goes negative, and then it's turned positive again. These are extremely rare, unusual circumstances. What is happening now is an international bank run on gold, and it is serious. This is from Bullion Star. Argar Harius will start charging a temporary extra fee on minted gold products. The surcharge is $3.50 an ounce for minted gold and a massive $3 an ounce for silver, which is almost 10% over the cost. And this is on top of, this is wholesale, so it's on top of their normal premiums and mint charges. The London Bullion Metals Market Association spot price can no longer be said to represent the price of physical metal, and it can't. Physical metal is diverging from the paper price. Central banks lending gold into the market in December and February, this is Ronan Manley, according to StoneX, to provide liquidity. Providing liquidity, also known as bailing out bullion banks when they face a lack of availability of physical gold in London, to which David Lee responded, "The gold market is screwing the Bank of England vault. The Bank of England is screwing at least 72 central banks who store their gold there, like Venezuela, Australia, Argentina, Germany, Austria, Switzerland, Belgium, and the UK, etc. We are having a master feces show, and I have to agree. Now, TD Securities strategist, he says, we're sleepwalking into the silver squeeze. Markets are still sleepwalking into the silver squeeze. The disruption in the silver markets are most acute in recent history as London's free-floating inventories drain below critical thresholds for market structure. And moving on, James Anderson responds that silver is more dislocated than gold. Silver has no lender of last resort like gold has with the central banks leasing out gold. So the silver squeeze can be far more explosive. And then Bob Coleman says, attention, all those who are trading these, here I call them ETFs, EFPs on silver, which is just a bunch of futures contracts and adds up to nothing. They don't have the metal, rather a promise from a counterparty. Let the following sink in. January's silver outflows from the LBMA, the London Bullion Market Association vaults, was a staggering 72 million ounces, the largest on record. It brought the monthly pace of outflows since Trump threatened tariffs to minus 33 million ounces per month. So the drain is 33 million ounces per month. And with the London Bullion Market Association holding 760 million ounces, it will only take 22 days versus gold's 100 days for the current pace to drain all of London's silver. What do you think happens to the price then? Silver price will have to adjust to reality if this persists. Imagine how big the deficit will be if physical buyers return to the market. Well, they're returning. So this is the supply-demand, the surplus and deficit of silver starting in 2019 and going through to today without the all of the investment demand that is just hitting the market right now.
As uncertainty looms over gold reserves and physical demand surges, the divide between paper and tangible assets becomes more apparent. With supply chains under pressure and calls for greater transparency growing louder, the future of gold's valuation may hinge on real-world availability rather than market speculation. Could this shifting dynamic redefine how gold is priced and stored, or will the current system withstand the growing scrutiny? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.